And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the show. My name is Al Gordon, and as always, I'm working on your financial freedom. And on today's show, I've got a set of rules for you. Yeah, it's not like you have enough rules in your life that you have to follow. I'm actually going to talk about 3 rules that you really should be following. So what am I talking about specifically? There's a guy by the name of Dell Wamsley. You ever heard of him? I mean, I've heard of him. I've definitely heard of Dell. As a matter of fact, the reason I've heard of Dell Wamsley is he is the founder and CEO of an organization called Lifestyles Unlimited. And I just happen to be a Lifestyles Unlimited member. And when you become a member of Lifestyles Unlimited, you're going to get exposed to a set of rules. Now, it's not like the set of rules that are put into law by our government, right? I mean, how many rules are actually out there that our government makes us try and live by? First of all, there's the whole set of laws. Then there's the whole set of government regulations, which supposedly tie into the laws, right? Then there's all kinds of other rules and policies that they put into place that they expect us to understand and live our lives by. And, you know, at the end of the day, if you follow the big 10, you know which 10 I'm talking about, you know, don't murder, you know, those 10. If you follow those 10, you're probably going to do okay with the rest of the rules that society has put upon you, even though you don't even know what half those rules are. Now, when you become a member of Lifestyles Unlimited, you will get exposed to 3 very important rules. And I'm going to get into those rules today because those are rules that you really need to embrace, and they're rules that will actually change your life. I'm serious about that. These rules will change your life. Now, who is Dell Wamsley? I mean, come on, let's ask the question. Some of you have never heard of Dell Wamsley. Some of you have never heard the Dell Wamsley radio show. Some of you are not Lifestyles Unlimited members, so you don't have the benefit of understanding that Dell's the president, founder, and CEO of Lifestyles Unlimited. So why do I bring up Dell Wamsley? Well, because he's the guy that has taught and lived these 3 fundamental rules throughout his entire real estate investing career. And his real estate investing career spans over 3 decades. I'm going to go out on a limb and say that, you know, Dell's been doing this for close to 40 years. Now, he's not quite old enough to be able to have done real estate for almost 40 years, but I think he's on the latter half of the 30th year. Yeah, I think he's been doing this for well over 37 years. And Dell could correct me. He could correct me in his radio show and tell me, well, it's specifically been this amount of time. But at the end of the day, do we really care? Do we really care that it's been 34 or 35 or 36 or 37 years? Because the big takeaway is that he's been following these rules for a long time, and they haven't let him down. As a matter of fact, these rules make so much sense that when I first share them with you, you may not be able to comprehend these rules. It may be just one of those things that blows right over your head. So why? Why is it that you can't comprehend these rules? Here's why. Because smart people, and I'm calling you a smart person because I know you're a smart person. Smart people have a hard time letting go of their belief systems that took them an entire lifetime to build. Yeah, you may be older than 40 years of age, and you are following a certain belief system that has gotten you through the first 40 years of your life. Maybe you're like me and you're close to 60, and you follow a belief system that's gotten you through close to 60 years of your life. Let me have you take a step back. And when I share these rules with you, I want you to let these rules soak in until they become absolutely crystal clear to you. Once you embrace them, you'll never wonder how you ever let yourself put money into risky investments. Yeah, That's what I think you're doing right now. Unless you're a Lifestyles Unlimited member, I think that you're putting money into risky investments. Interestingly enough, these rules, man, they're really not rules. They're not new rules. They're not new at all. They're based on timeless principles that have been around for thousands and thousands of years. They're the same principles that Benjamin Franklin used to create a massive amount of wealth over 2 centuries ago. Yeah, speaking of Benjamin Franklin, I was curious about how much wealth he developed in his time on this planet. As a matter of fact, there's a 1996 book that places Franklin as the richest American in the half decade of 1785. They're the same principles that Andrew Carnegie used when he passed on the information to Napoleon Hill, who actually put these rules into his famous book, Think and Grow Rich. Now, if you've not read Think and Grow Rich, get yourself a copy. I mean, you can get it off of Amazon. It's probably like dirt cheap. Just get a used paperback edition. You don't need to have, like the first edition hardcover copy, because the information's the same whether you get the cheap paperback or you get the expensive one. And at the end of the day, you just need the information. And the information that's contained in there will help you retool your mind. As a matter of fact, these same principles are the principles that Warren Buffett lives by today, and he's been trying to tell you about, but most people, they don't listen to Warren Buffett. And maybe it's because Warren Buffett doesn't have a radio show like we do. I'm not sure what the reason is, but I know Buffett talks about the same principles that Dell Wamsley talks about. And even now, after putting these rules into the airwaves, because I know Dell has talked about these 3 rules on his radio show many, many times. I remember hearing him talk about these 3 rules on his radio show many, many times. And even though these rules have been out there and they've been released to the world, most of you don't get it. You think it's too good to be true, or it's just too boring, or too whatever. Yeah, fill in the blank, right? Well, there's a paradox of true wisdom. Yeah, it is that these 3 rules are purely a paradox of true wisdom. Napoleon Hill, Warren Buffett, and Dell Wamsley have been screaming from the mountaintops for over the last 100 years, but only a few people will listen, and even less will take action based on the knowledge of these 3 rules. And a lot of people wonder why, at Lifestyles Unlimited, we tend to reference Warren Buffett. I talk about Buffett from time to time on my radio show. I know that Mike Harrison does. I know that Andy Webb does. I know Dell talks about Buffett. While at the same time, we put the stock market down. Have you ever noticed that? Here, if you haven't noticed it, here, I'll do one for you right now. Warren Buffett's probably one of the best investors in the world, and the stock market is a terrible place to put your money. Yeah, okay, I kind of did a little paraphrase there, but that's kind of what we do. So why do we do that? Why do we praise Buffett on one hand and we put the stock market down on the other hand? Because many stock investors look up to Warren Buffett for guidance, but they don't realize that Warren Buffett is in a very different business than those stock pickers are in. Did you know that? It's true. Now, Warren Buffett is not sitting behind his computer at home on a discount online trading account, buying and selling stocks for his 401k. Now, he doesn't do that. In other words, he's not buying stocks at retail with his own money. What Warren Buffett is doing, he's buying the entire company at wholesale pricing with other people's money. That's right. He's leveraging the purchase. He's using other people's money coupled with his money, and he's going in and he's buying a company that's not doing very well. And what he plans to do is get that company to a place where it is doing well. And that's how he makes his money. He uses the stock as the vehicle to purchase the company. He's not trading stocks. That's what you don't understand. See, everybody thinks Warren Buffett is this great stock picker. No, he's a great company picker. He can smell a bargain. He can smell a deal, and he goes after it. Now, can you spot the difference? It's very subtle, but the realities of this difference are vastly important. I mean, let's start with retail versus wholesale. Warren Buffett finds companies that he can buy for 50 cents on the dollar. In other words, he's sticking to Dell's first rule of investing, and I'm going to give it to you right now. Simply this: don't lose money. That's rule number one. Don't lose money. More on that in a minute. But Dell Wamsley learned to do the same thing in his favorite asset class, which is residential income-producing real estate. He teaches his members, people like me, people like you, how to buy properties for 50 cents on the dollar. And when you buy that asset so cheap, it is hard for you to lose money on that asset. You'd have to really screw it up bad to lose money. But what about other people's money versus personal money? Well, Buffett, like I mentioned a moment ago, uses the power of leverage to amplify his wealth exponentially. There was a documentary that I saw a while back, and it focused on Warren Buffett's early years of investing. And it says he literally went door to door in a neighborhood to raise money for his investments. See, he was looking for other people to partner with him. He was looking to leverage their purchasing power, add it to his, and therefore he could go in and make the purchase that he wanted to make, even if he didn't have enough money. And when you're using the power of leverage to buy assets for 50 cents on the dollar, get this: you can't get rich slow. You can't get rich slow. And that, by the way, is rule number 3. So far I've given you 2 of the rules, but I haven't given you the second one, have I? Yeah, I'm just playing fun games with you. But really, let's think this through. How are you investing today? What are you doing for investment? Are you leveraging other people's money to invest in the assets that you're investing in? And the short answer is no. The only person you're leveraging is yourself, and you're using after-tax dollars to buy fractional shares in your 401k. Yeah, that's what you're doing, right? Do you even know what you're invested in? I mean, do you even have an understanding of the companies that are in your portfolio? Yeah, they send you that big, thick prospectus every year, right? Do you read it? And here's the thing about that prospectus. It's only good as the day it was published. Once they send it to you, it's out of date. It's ancient history. And even then, do you still understand what you're invested in? Do your values align with the companies that are in your portfolio? Do you even know what the values are of the companies that are in your portfolio? Some of you do. You pay attention to the news. Some of you don't. You could care less. But that's my point. You're on cruise control. We got to get you off cruise control. We got to get you back to a person that thinks through things. When we come back from the break, I'm going to get into the rules, and I'm going to hit you with all 3. Stick around.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
We went from 100% live to 100% virtual. And you know, the funny thing is that nobody wants to go back to work now they work from home, right? So now my members are like, well, Dell, we want to keep those virtual things open because now I know all the people in Miami and I know all the people in Chicago. I know all the people now know each other from all over the country because of these virtual events.
The free workshop, How to Retire in 5 Years or Less, is online. Go to lifestylesunlimitedworkshop.com.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the second half of the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and I'm working on your financial freedom. Dell's not the only person that has been trying to share this information with you. I've been trying to share it with you. Andy Webb Mike Harrison, my fellow Lifestyles Unlimited real estate investor radio show co-host. They've been trying to share this information with you. So now that I have your mind where I think your mind needs to be, now I already shared rule number 1 with you earlier in the show, but I'll share it with you again because I know some of you weren't paying attention. So rule number 1 is simply this: don't lose money. That's it. That's the entire rule in a nutshell. So which assets would qualify? Do stocks qualify? Can you lose your principal when investing in stocks? Yes, you can. If you saw what the stock market did through 2022 through 2023, so it's very true that you can lose your principal when investing in stocks. What about retail real estate? That's real estate that you go out and you pay for that is at full market price. And that's how many of you buy your real estate. Consider the house you're living in. That house was probably purchased at, if not full retail value, very close to full retail value. Can you lose your principal when investing in real estate at retail prices? And the short answer is absolutely. You totally can. Real estate markets fluctuate also. They do fluctuate. Not as crazy as the stock market, but real estate markets can fluctuate. People in California and New York and Florida are painfully aware of this fact. And as Dell Wamsley likes to point out, real estate by itself is not a cure-all. It is not a cure-all. In inflated markets, people will pay anything for real estate because they think that all real estate goes up in value. And that's just not 100% true. I mean, look at what's happened since the pandemic. Have real estate prices gone down? In some markets, yes, they have. Not in every market, but in some markets, real estate prices have gone down. So what about wholesale real estate? Not retail real estate, but wholesale real estate. Can you lose your principal when investing in real estate when you're buying it for 50 cents on the dollar? And the answer is this: only if you screw it up, only if you mismanage it. Now, most of us don't go out and buy massive companies for 50 cents on the dollar like Warren Buffett does. I mean, I pointed out earlier in the show what Warren Buffett does for investing, right? But the easiest way to emulate Buffett is to do it with real estate. You can go out and you can buy one single-family rental property or even a small apartment building at wholesale prices, and you can start to build wealth like Warren Buffett does, like Dell Wamsley does, like I do, like the 50,000 members at Lifestyles Unlimited do. That's what we're trained to do. It is a huge game changer, a huge game changer. Now let's talk about rule number 2. This is the rule that I haven't disclosed to you yet. Nowhere in the show have I told you what rule number 2 is, but I think you're ready for it now, especially since I think we've made our point clear about rule number 1. Remember, don't lose money. So when you buy assets that are positioned to where you won't lose money, right? So what is rule number 2? It has to cash flow. This is how we do it. We call cash flow the cake, and everything else, like all the equity contributions that we get, all the tax benefits that we get, all of those other things, we call those things the icing. Do not buy an asset unless it cash flows. Now, there's an entire industry that has been built around flipping houses based on price appreciation alone. That's what flippers do. They go out and they find something they can buy for 50 cents on the dollar. They buy it, they fix it up, and then they sell the property. They don't get cash flow. You might be thinking, well, wait a minute now, hold on. What about the money that they make? What about the money they make off the sale? That's not cash flow. That's money that comes from appreciation. What these would-be investors find out is that they are speculating. And when the price is correct, they get stuck in a cash-sucking whirlpool. No other way to describe it. If you only buy assets that cash flow, do you care if they go down in value? Now think that through for a minute. Now here's my response. I don't really care if they go down in value. because it's the cash flow that matters, and that doesn't change. Sometimes, like during the last recession or the recession we're currently in, cash flow increases even though the value of single-family houses have gone down a little bit. If you buy investment property using Dell's first rule, you're not going to lose money if they go down in value. And here's why. You bought at wholesale prices. You bought the asset for 50 cents on the dollar. You fixed the asset up, but you're not at full retail pricing. You're at a percentage of retail pricing, but you're not at full retail pricing. So you're actually capturing equity in the deal. That additional equity that you captured that you're not paying any money for, it creates a buffer for you so that if you had to sell the property, you still wouldn't lose any money. You wouldn't lose any money because it's paper money. It's equity, and equity can change over time. Now, the good thing about real estate is that equity tends to go up over time. It does, in certain times, it does tend to go down. There are very specific times when that occurs. You can do your own research and find those times. But the vast majority of time, the equity is going in the right direction. It's going up. So if you bought an asset for the cash flow, don't worry about the pricing on the property because you're going to hold that property for several years. And you're going to take advantage of all the different ways that real estate can pay you. And the most important way that it pays you is the cash flow. Rule number 2, it has to cash flow. So what about rule number 3? Well, rule number 3 is simply you can't get rich slow. Now, let me back up and I'm going to give you all 3 rules once again so you hear them all together. Rule number 1, don't lose money. Rule number 2, it has to cash flow. Rule number 3, you can't get rich slow. Now, here's another paradox. I mean, the first 2 rules seem conservative compared to what you're used to doing, right? And they are, but if you follow them, get this, you can't get rich slow. Isn't that interesting? If you become more conservative and only put your money into solid assets, you can actually outperform the so-called aggressive investors that are out there doing whatever they're doing in the stock market or in other investments. So how does this work? Simply put, once you become a money-making machine, people will literally throw money at you. You will begin to harness the power of leverage like Warren Buffett and Dell Wamsley have. The banks will give you loans. People will trust you enough to become your passive partners. Your investment base will become massively larger than what you could have accomplished on your own. So when you listen to this radio show, one of the things that I tend to do is I tend to talk to you about particular properties that show up in my inbox. Why do I talk to you about these properties? Because I'm conveying to you the 3 rules that Dell Wamsley has conveyed to me, which I live by, in the assets that I'm invested in right now. I'm not losing any money. If I sold the assets today, I don't intend to. Okay, there's one I intend to sell today that's been on the market for a little while. So there's one I intend to sell. But I'm not losing any money. The assets cash flow. They produce an income stream that I use to pay my costs of living. And I'm not getting rich slow. I'm not. I've been a member of Lifestyles Unlimited for 6 years. For the first 2 years, what I did was I focused on getting myself to a place of retirement. I still embraced all of these rules, and I focused on getting myself to that place of retirement. I achieved that place of retirement. I thought it was going to take 5 years. I got it done in 2 years. Now, you have to understand that I had tried to retire myself once before when I left the military, and I was a dismal failure at doing it. So when I was able to retire myself the second time I tried it with the assistance of Lifestyles Unlimited and Dell Wamsley, it stuck. I have been retired for the last 4+ years. It's pretty amazing. I do what I want. I go where I want, when I want to do it. The only time commitment I have is to do this radio show for you, and it's not like work because I enjoy sharing the good news of what was shared with me. I'm your town crier. Yeah, I'm the town crier telling you this stuff works. You need to do this. Why do I do this day in and day out? Because it works. And these 3 rules: don't lose money, it has to cash flow, and you can't get rich slow, they're embedded in my brain. Yeah. Now, I don't walk around every day going, well, rule number 1 is don't lose money. Rule number 2 is it has to cash flow. Rule number 3, you can't get rich slow. No, I've embraced the rules. They're a part of my psyche. It's how I do business. It's how I operate. So I own real estate assets. And then from time to time, I will dispose of the asset. The reason I dispose of the asset is because it has accomplished what it was intended to accomplish for me. And when I look at the rates of return that it's doing and I compare it to what I could do in the current market, sometimes the current market tells me, dispose of what you have because there's a better opportunity for you now. And that's why I share with you all these different properties that come across my desk, because I want you to realize that there are 5 different ways that we make money in real estate, and they all tie in to these 3 rules. You want to hear the 5 different ways we make money in real estate? Okay, get this. There's the cash flow. That's rule number 2, right? But it's one of the 5 ways we make money in real estate. There is equity capture. That's because we're buying the asset at wholesale pricing, we're fixing it up, we're staying at wholesale pricing, and the difference between that wholesale pricing, our all-in cost, and what that property is really worth at the retail level, that is the difference that we add to our equity line. We don't pay a dime extra for it. It's free equity, and we take it. Yeah, it positions us very well in the asset. It protects us from losing money. The other ways we make money in real estate have to do with the natural appreciation and the fact that we leverage our properties by using a loan. We leverage correctly, and therefore we take advantage of appreciation, and all of the appreciation becomes ours. There's principal pay down. Because we have that loan, a portion of that loan goes to principal pay down. That increases our equity in the property. And then there's all the tax advantages, which are tailored to real estate investing. Now, we at Lifestyles Unlimited didn't make Congress pass those laws. Those laws were in effect when Lifestyles Unlimited came into existence. But we take advantage of all those laws, and so far none of those laws have changed. So why would we do anything different? This, at the end of the day, is how you make money. This, at the end of the day, is how you invest. You should be invested in real estate assets, because when you're invested in real estate assets, you're poised to not lose money, you're poised to get positive cash flow, and you can't help it if you're getting rich fast, because you can't get rich slow. It is a perfect recipe for your future success. You want to do what I'm doing? You want to do what Dell Wamsley's doing? You want to do what the 50,000 members of Lifestyles Unlimited are doing? Go to lifestylesunlimited.com, sign up for that free workshop, and let's get you going.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.